This is Ryan Coombs, Vice President of Research and Strategies at Carty & Company. Here's your weekly market update ending the second Friday of March 2016. In the economy, initial jobless claims are at their lowest level since last October. New claims fell more than expected to a reported 259,000. The prior period was also revised lower by 1,000 to 277,000. Claims have now run under 300,000 for a full year. The 4-week moving average, which accounts for volatility, fell by 2,500 to 267,500. It has now declined for a fourth straight week. Bloomberg asked economists to rank the 6 reasons the Federal Reserve may skip a rate increase when they meet on March 15th and 16th. Sluggish U.S. GDP growth polled as the primary reason the Fed will skip a rate hike. U.S. growth has trended downwards, now falling for 3 consecutive quarters. Low inflation was ranked as the second most important reason by 42% of the economists. Nearly 3/4 of economists said that a divergence of Fed policy from other major central banks was the least likely reason the Fed may skip a rate increase. The bond market is boosting its bets on the Federal Reserve interest rate increase in June as stocks and oil rally. Traders now see the probability of a June rate hike is slightly better than a coin flip, according to futures data compiled by Bloomberg. That's up from 45% predicted on Thursday and much higher than the 10% odds seen a month ago. Since 1994, the Fed hasn't raised rates unless the futures market had priced in at least a 60% chance of a move the day prior. The 10-year yield has increased more than 30 basis points over the past 2 weeks, up from 1.65% to 1.97% at the closing bell on Friday. Yields are now approaching an important 2% threshold, which could become a level of resistance. This is something we will continue to monitor. U.S. stocks joined the global rally, sending the S&P 500 index to its highest close this year. Investors have reassessed stimulus measures in Europe and warmed to steps being taken to boost growth. The S&P 500 rose 1.6% to 2,022 at 4 p.m. in New York, capping a 4th straight week of gains, the most since November. The gauge finished above the average price during its past 200 days for the first time this year, ending the longest streak below this threshold since 2011. Banks and commodity shares were the best performers, continuing to pace a month-long advance. Citigroup and Wells Fargo added more than 2.5% on the week. Dow Chemical gained 3%, while Anadarko Petroleum jumped 9.2% to a 2-month high, as crude headed for its longest run of weekly gains since May. That sums up your weekly market update ending the second Friday of March 2016. For more details, please visit our information center at www.cartyco.com, and for real-time updates, follow us on Twitter at Fixed Incomes. Thanks for watching and have a great week.